It came out of nowhere. Kaito is suddenly up. It's at $1.11. It's one of the major tokens on the base chain. The question is, how much longer can this rally last? Who's buying here? Who's selling here? Let's have a look at some on-chain data, the data most people are not looking at. Now here's the situation. $1.11 is the price. We went up by 35% and this rally is quite constant, without much volatility. Kaito is a project that tries to monetize attention. It's almost like a GameFi. The more attention a user has, the more points are generated, which can then turn into money. To figure out where the price might go, we always have to look at both demand, but also supply. So let's have a look at the tokenomics. Here's the distribution of the supply. And unfortunately, the insiders do get quite a lot. 25% to core contributors, 32% to ecosystem and network growth, so that's probably marketing spend. 10% is an ICO or an airdrop, some staking incentive as well, and here another 18% for early investors. So really the supply is quite concentrated. It's not really fairly distributed. But then we also have a look at how the supply expands over time. And this is shown over here. This is the token unlock schedule. We are still in the early stages before the very first unlock. And over the next 4 to 5 years, we will see the supply more than 4x. So the demand has to grow at least at this rate. If it doesn't, then of course the price has to underperform Bitcoin. Now with that price rally, Kaito became a trending token on the base chain. It's the 88th largest. There isn't that much liquidity on chain though, only 66k for a token with a market cap of $271 million. It's another hint that a few hands might have a big impact on the price. This is not necessarily a price that's determined on chain by thousands and thousands of holders. In fact, the rally that we see today is not in line with the general trend. At one point, the Kaito price was at almost $3. From the top to today's price, we went down by 58%. On chain, we've got 94,000 holders. So that's how many wallets hold the token directly on the base chain. On Twitter, or now called X, we have 300,000 followers though. Isn't that mismatch quite interesting? I'm wondering if all of those followers are completely organic or if some of them are just bot accounts. Here's again the token distribution as it is today. 2 wallets hold more than half of the supply. And here's the number of retail investors and whale investors over time. So we can have a look at whether or not we do see adoption, at least on chain. The way we make this distinction is by looking at minimum holding thresholds. So to be counted for the wallet, in the left chart, a wallet has to hold at least 1,000 Kaito tokens. So at the current price, that's a bit over $1,000. To be counted for the chart in the middle, it's at least 10,000 tokens. To be counted for the chart on the right, it's 100,000 tokens. Now we don't necessarily see that much more growth in the number of investors across all wallet cohorts. This here is a daily chart, but let's zoom in a little bit. This is the same thresholds, but with hourly data. So we're just looking at the last 30 days. And again, the change is barely noticeable. While the price over the last month definitely did move, right? From 70 cents all the way to now above $1. That kind of volatility cannot be explained by transactions on chain, especially given that the liquidity is that low. The project started out with a lot of buying and selling on chain, but since then, in the last weeks, this has fizzled out. Here is what I believe is really moving the price. It's a few insiders and a few market makers that own a lot of supply and that at the same time benefit from the levered bets on the price. So there are derivatives, there are perpetual futures that allow to bet on the Kaito price. Now, if you offer those kind of bets and at the same time you own a lot of the supply, then you can pretty much at will force liquidate the people that speculate on the price. So check this out. This is the spot trading volume across various exchanges, and it's all just centralized exchanges, and it's led by Upbit. Now we've also got the perpetual futures market. So that's now the bets on the price. And that is led by Binance. There had been 326 million worth of trading volume on Binance alone in the last 24 hours. If we add Binance and OKX together, it's more than $500 million. For comparison, on the base chain, we had less than 1 million of trading volume. So more than 500 times the trading volume happens on the perps on the centralized exchanges. This is actually where the price discovery happens. It's not the spot market, it is the perp market. And so just have a look at how much the spot price correlates with the open interest on the perpetual futures market. As more and more people bet on the price is going up. As there's less speculation happening, the price tends to go down. So this yellow line and the green area, they correspond pretty well to one another. And so we do see more and more open interest again on Kaito. And that open interest is mainly short interest. So a lot of people are betting on falling prices. Now this is not the normal behavior. Usually the longs have to pay the shorts because there's leverage involved in perpetual futures, right? We get more exposure, and long term, of course, crypto prices tend to go up because the US dollar devalues over time. So on average, we should expect that longs pay shorts. When the shorts are willing to pay massive interest to the longs in order to bet on falling prices, that means it becomes more and more attractive to further short squeeze the market. Now, what is short squeezing? It's intentional short-term manipulation of the market. So here's how that works. If the centralized exchanges and the market makers see enough short interest, they see enough people that bet on falling prices, then they are incentivized to buy up more and more of the token for two reasons. First of all, they get a lot of interest, right? The shorts are paying now the longs. But secondly, as the people get more and more into losses by betting on falling prices, at some point they might get forced liquidated. And the forced liquidation means, again, a settlement. It means the money flows directly to the longs and the spot price goes up even further. And so since right now the financing costs for opening a short are still extremely high, since it's still expensive to bet on a falling Kaito price, we're probably going to see a continued short squeeze. We're probably going to see the price rallying for a bit longer. For how long? Your guess is as good as mine. But the best is probably just to go to coinglass.com and to continue watching the weighted funding rate. And when this stabilizes again, it might make sense to exit in case you're already invested in Kaito. In general, it's actually a good strategy to bet on falling prices of short squeezed assets. But we have to be certain that the squeeze is over. Sometimes we see those secondary squeezes. So we see an initial short squeeze, a lot of people get liquidated, and then some people might enter the short again. And then we see a secondary squeeze. And usually after the second squeeze, we see the final deflation. We see this several times in Dogecoin. We've seen this recently in Trump coin. And we might see this in Kaito as well. Here, let me show you what I mean. We had a short squeeze over here, then a deflation, then a secondary squeeze here, and then came the final crash. Over here, short squeeze, deflation, secondary squeeze, and the final deflation. Or over here, short squeeze, deflation, secondary squeeze, and then the final move down. So that's Dogecoin. Have a look at Trump, very similar, short squeeze, deflation, secondary squeeze, final deflation. And when we enter upon the secondary squeeze, we can make very nice money. Have a look at this. This is one of the trades that I shared. This is part of Premium. That's the Trump token. I'm initiating another short position on Trump. As it appears, the secondary short squeeze has run its course. And we once again are seeing downward pressure on the price. And so a lot of members entered this position as well, made some gains. And then a few days later, I closed the position, of course, using some leverage. And that's then where those larger gains are coming from. But again, we want to exit a position when financing costs for shorting are very, very high, right? That's then when the trade becomes popular, and that's then when the price likely goes up, right? This was the short entry, this was the exit. It's a clear player versus player game, and very often the market makers just move the price in the direction that wrecks the most people, right? That's simply just in the direction where the majority loses. And we want to open the position that the majority does not open. Again, right now, it appears as if the market makers still have incentive to push the price higher. But let's see how this plays out. I'm not shorting Kaito yet. I'm waiting for a secondary short squeeze. Now, in October of 2023, the market flipped. The market turned from bear to bull. The market saw inflows from traditional finance. And we can see this in this chart. This is the stablecoin market cap. So it shows how many dollars in the fiat system are deposited somewhere with a custodian, say with Tether or with Circle, and what equivalent has been minted as stablecoins on chain. And from May of 2022 to October of 2023, we actually saw a contraction of the market. So money was flowing out of crypto. People were turning back to TradFi. People were withdrawing their money. But that then changed in October of 2023. Since then, we see more people depositing than withdrawing from the crypto ecosystem. And surprise, surprise, this is of course also an impact on crypto prices. When money is flowing in, crypto prices tend to go up. And that is what we see with this chart at the bottom. This is the Bitcoin price. So when money comes into the market, Bitcoin goes up, and that is with a leverage effect. So Bitcoin appreciated by 260% since the beginning of October, while the stablecoin market cap went up by only 85%. Now still, there is a lot of volatility. What causes a price drop like this of 26% while there's actually money flowing into the system? The answer is swapping activity. So it's not just people depositing their money into the system and then wait and invest for the long term. Most people in crypto trade actively. And whenever people move from stablecoins to risk on assets like Bitcoin or altcoins, the prices go up and vice versa. So there's money flowing in and out, and there is swapping activity, people getting risk on and risk off. Now we can use that data because we can have a look at how much of the entire cryptocurrency market cap is currently in stablecoins. When most people have swapped into stablecoins, the stablecoin dominance, so the percent of all of crypto that's in stablecoins, that's pretty high. When a lot of people have deployed their stablecoins, then the stablecoin dominance is low and the crypto prices are high. So check this out. This is the stablecoin dominance, and this is much more volatile than the stablecoin market cap. And at the peak, 19% of all of cryptocurrency's market cap was just stablecoins. So that's when people are very much risk off. And that's then also when the Bitcoin price tends to be low. As stablecoins get deployed into risk-on assets again, the Bitcoin price tends to go up. Now in the last 1.5 years, we tended to trade in a range. So that's between 9% stablecoin dominance to 5% stablecoin dominance. And if this is now coming back down again, as we have seen in the last few days, then crypto prices will go up. Let's work with the assumption that we see the exact same development of people deploying their stablecoins again as we saw in November of 2024. So let's overlay this. If we take this time frame and we look at the Bitcoin price development during that time, then we can overlay this to the price today. And we're getting to a potential upside of somewhere between $130,000 to maybe even $150,000 per BTC. And so this is, I think, the most likely scenario. I think most people have this backwards. There are too many comparisons made with traditional finance and the crypto ecosystem, as in when the money supply is going up or when the Federal Reserve is lowering interest rates, that's when money is loose and that's when crypto prices should go up. But I don't think the link is that strong. I think the link is much stronger for how much money is currently on the sidelines already within crypto. We know that the crypto ecosystem as a whole is expanding, right? The stablecoin market cap is going up, and that obviously matters. And at the same time, we also see that a lot of that stablecoin money is not yet deployed, but is ready to get deployed. And so if we work with that scenario, if we say, okay, a lot of that money might get deployed if times get a bit brighter, should we just go now and buy all kinds of random altcoins? I am not so sure, because here's the counter story to all of this. The Bitcoin dominance continues to go up. So as a fraction of all of crypto, Bitcoin becomes more and more important. Bitcoin tends to outperform most other assets. And we only saw an altcoin rally when Bitcoin dominance was close to 70%. So when only 30% of the cryptocurrency market cap was in the alts, that's when the alts were cheap enough to subsequently make a rally. And we are not yet there. So just building a portfolio of altcoins is probably not going to cut it just yet. Here is what I'm doing instead. I'm looking at what are other influencers and other heavyweights buying. So we track various important wallets and we see, for example, how the Pepecoin team or the base AI team is accumulating the KEK token. And that's happening at a very small market cap, only 3.2 million. We got notifications for all of those purchases, and though the price just continues rising. We still need an edge in this market. We can't just buy any random altcoin, but the market is expanding. It does make sense to take some risk on bets now. Now, since crypto cannot create money out of thin air, it's still a player versus player game. And so if you follow the insiders, if you follow the people that traded well in the past, we have an edge. For example, over here, we've got 33 wallets that we track by the Crypto Banter group. They've got 1.16 million subscribers on YouTube. Or we are tracking 12 wallets by Alex Becker. He's got 1.6 million subscribers. Or check this out, Brian Young. We have 5 of his wallets and he's got 2 million subscribers. So there are two components to this. First, those influencers tend to get information relatively fast. They tend to beat the market. But secondly, they might also have an impact on the market. So when somebody with 2 million subscribers talks about a small cap cryptocurrency, of course, some of the followers will buy the token, which then pushes up the price. And so with all of those wallets that we are tracking, we get various signals. Who's buying and selling what at what point in time. And while it's nice that the market is expanding, it's still a winner takes most market. So returns are very much concentrated in just a few assets. There are mostly losers in this market and a few winners that take it all. Just have a look at the top 100 cryptocurrencies in the last year, right? There are some tokens that perform phenomenally and a lot of them that are just losing. So just diversifying does make sense. If we just build a portfolio of many different altcoins and we don't trade actively, then we are underperforming Bitcoin because Bitcoin dominance continues to rise. Instead, what we need to do is we need to find ways to buy things such as virtual very early. And this is where we come back to Brian Young. We got a signal of Brian Young buying into the virtual token, and that was at 7 cents. So that was on the 21st of March of last year. Our community got excited and bought in. And of course, the rest is history, right? Now we are at $1.75. And so this is my strategy in this market. The market is expanding, people are making profit, but still returns are concentrated in a few winners. And we have to have a way to identify those winners. And we don't have to be the best at this, right? We just need to know who are the best and we have to find their wallets. And of course, this is not public information. And so we have to do on-chain analytics to find the wallets. And so of course there is the influencer trade channel with all of those signals, but there's also a tutorial course on how to find different wallets. So we use related trades, we use official NFT transactions, we try to figure out ways through deposit addresses on centralized exchanges, etc. to get new wallets that we then actively track with this automated bot in the channel. And since the community is learning how to find new wallets, we also have a dedicated wallet research channel. So this is then where our 500 members look for new signs for influencer wallets. And once the moderators have confirmed those wallets, they get added to our tracking. For example, here, right, we've got Crypto Gains that suddenly out of nowhere was talking about the Champ token. And of course, we knew about this because we saw the purchase alerts before in our tracking. And so by tracking the insider wallets, we become insiders as well. Not of course in the legal sense, because all the data on the blockchain is 100% official and transparent, but we do have an edge over other market participants because most people don't go through all of that effort. And so it's not necessarily just about buying one asset and finding the winner and holding it long term like virtual. It's also about shorter term trades. And so the community, of course, shares the winning trades as well over here. Just have a look. If you add some leverage to the game, you can make quite nice gains in a short period of time as well. So feel free to check it out. It's currently $125 US per month. If your crypto portfolio is not just $500, but rather 5,000, then it's probably going to worth it for you, especially in this current market. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.